Well, Lucid is outperforming Apple and Tesla over the past 6 months. You have shares up around 69% compared to roughly 66% for Apple.
For its position in the electric vehicle section in particular, Lucid Motors is a popular stock on media platforms. The company's stretched value is especially noteworthy, given the company's market capitalization of roughly $70 billion, particularly when the corporation is matched to more conventional automakers. This is a massive valuation. Despite the company's moniker, the future of Lucid stock is everything from certain. To gain a more clear picture of LCID's position in the market, as well as the impact from the lockup expiry, let's look into some statistics. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder, subscribing is free. Linking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. Lucid stock has so far increased over 11% in the first 3 weeks of the new year. Meanwhile, Rivian stock has lost 30%. In addition, Tesla stock has dropped by more than 14% since the beginning of the year. There have been no significant announcements from Lucid this year. The EV sector, on the other hand, has indeed been jam-packed with news over the last month, including Tesla's record production and delivery statistics, Ford's rapid ramp-up of its EV manufacturing, and Toyota's announcement of a significant investment in battery technology. All of these are positive indicators that both younger startups and established automakers are seeing significant customer sales volume and market opportunity for electric vehicles across a range of pricing points and segments. Despite the flood of positive news for the sectors, the vast majority of them underperformed Lucid, regardless of the fact that the startup hasn't disclosed anything positive. Even more, Lucid had a lockup expiry that was expected to eat away the value. Still, LCID popped up as the strongest of the major American EV startups. Despite the fact that it was hard to miss, Tesla's market value surpassed $1.25 trillion last year, when its stock prices rose by more than 55% in a single month. Consider, for instance, Tesla, which in just 1 month increased its market capitalization by almost $350 billion, surpassing the combined market capitalization of Toyota and General Motors. Tesla's stock, on the other hand, has dropped more than 14% since the beginning of the year, and is now hovering around the $1 trillion market capitalization barrier, as investors respond to CEO Elon Musk selling part of his Tesla stock. If you compare the stock prices of Tesla and Lucid for the year 2022, you will see that both companies' stocks began the year with a similar negative trend, which was most likely caused by the Federal Reserve's decision to raise interest rates. However, both equities had a total reversal of fortunes after that. Tesla, who managed to deliver a record number of electric vehicles in the previous year, astonishingly dropped even farther below, while Lucid, which has been dubbed the rookie, showed resistance, and the stock's direction swung towards a more bullish run. By the second week, the value of both stocks had changed by 11%. Tesla, however, dropped 11% of its value, while Lucid gained 11%. Despite the pressure from the ROC expiry on January 19th, LCID has maintained a positive year-to-date change for the year. This undermined Wall Street's optimism in the electric vehicle startup. Tesla wasn't the only company that was outclassed by the Californian business. It outpaced businesses such as Rivian and even Apple, which is the biggest of the technology companies. Rivian, which was seen as the golden egg by many investors because of its partnership with Amazon, was indeed the worst performer of the bunch, suffering a more than 30% decline in value since the outset of the year. LCID is trading at a premium to the price of a technological growth company. In other words, the market has valued the corporation solely on the basis of its technical potential, rather than on the basis of the actual units produced or sold by the organization. Plans to disrupt the car business that are both clear and ambitious, cutting-edge technology, competent management, and a lot of money. However, if you look closer, you can observe that the company has an outstanding growth trajectory. It's hardly shocking that Lucid has a market capitalization of roughly $70 billion, considering that the business has set a manufacturing goal of 20,000 units by the end of 2022. Comparatively, the conventional car maker Honda has a market capitalization of $52 billion, and it will produce around 4.4 million vehicles in 2020. But Lucid is valued like a tech company and not any automaker. The same goes for Tesla and Rivian. One of their most important growth drivers is the production of high-quality electric automobiles. The Air sedan, the company's flagship model, was named the Motor Trend Car of the Year, which is regarded as one of the most prestigious awards in the automotive business. This highlights the high level of craftsmanship that has gone into the car and helps to establish the brand's reputation. If the business is able to maintain its high-quality car production, it should have a prosperous future. As a result, it is an intriguing long-term investment. 2022 could be a year in which Lucid handedly outperforms the market. Existing EV companies should continue to generate sales and profits, while new entrants like Lucid must close the performance gap between their promises and actual outcomes if EV stocks are to continue to gain in the year 2022. No matter how disruptive entrants like Lucid, Rivian, or NIO can be, it's vital to keep in mind that none of these companies is the next Tesla. In many respects, they are simply the top of the iceberg when it comes to the EV stock market. There has never been a better moment to make an investment in electric vehicles, since investors now have more alternatives than ever before. The process of putting together your own basket of your favorite EV stocks is an excellent approach to obtain exposure to an exciting market without putting all your eggs in one basket. However, in today's speculative market, investors are ready to disregard the fundamentals of a company's operations in order to concentrate on the company's long-term potential. This might indicate that we are on the edge of witnessing a wave. The electric vehicle area, although not a trend, may be said to have been propelled ahead by the current optimistic wave, even though this may be stretching the truth. I'm looking forward to knowing what you have to say. Is it surprising to you that Lucid was sufficient to smash the lockup expiration pressure? Furthermore, where do you see the startup in the future, now that the stock of the firm is doing better than the majority of EV startup? Let us know what you think by leaving a comment down below. Recently, Rivian disclosed their units of electric vehicles delivered, revealing that they had missed a few hundred deliveries, about which 4Loops estimates that Rivian lost around $1 billion in market value every vehicle they were short. He suggests that it would be quite inexpensive to spend extra money for chips in order to prevent such costly experiences. That should wrap things up for today. Keep in mind that subscription is still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch.